Hello everyone, welcome back. We will now continue with income tax, and we will now look at employment income. Now, employment income is very important part of ACCA taxation, whether it is F6 or P6, but examiner can examine in much detail at F6 level. So please make sure you listen to this lecture very carefully and do lot of practice as far as employment income is concerned. Alright, now employment income, as you know, that it is employment income, so income which you earn from your employment. So employment means salary. So say for example, if you work for a company, the first things which comes in our mind while we work for a company is salary. So although we will get the salary is just a small element, but the big companies, they pay different sort of benefits as well. They pay bonuses as well. So in order to calculate the employment income for tax purposes, although salary will be a simple just one figure, but the main difficulty comes when we calculate the benefits, and there are lots and lots of benefits when we see the employment income. Alright, so let's look at the notes now. I will share the screen with you, and we will go through different sort of benefits and see how to calculate the employment income. We will do a couple of examples as well in the next video, which will explain a little bit more complicated issues of employment income. Alright, now let's move to our notes, and we will see the employment income together. I will just go ahead and share the screen with you so that we both can see the notes. Now, as you can see on your screen, this is employment income. Now, as I said, excuse me, as I said, the main element of employment income is the salary. So first thing is that we will add the salary. Now, although salary is a very much important element, but there will be something called bonus as well. Now, bonus is the amount which is paid by the company when the company is happy. Now, they can pay you yearly, they can pay you once in twice a year or whatever. All right, so when you perform well, or when the company is doing good, then they can pay you some bonuses. The next thing is to the next thing which the company pays is the benefit. Now, the benefit could be paid in many different ways. There is about 45 sort of benefits which we will study, and it is not limited to them 45 benefits. There are many others as well which I haven't listed in these notes. So the benefits could be of many sort. All right. So we'll take the salary, then we will add the bonus as well in it, and we will add some benefits as well, whichever the benefits will be given to us in the exam. Now, although there is a huge list of benefits, but examiner will not give you all the benefits which we will study here. So he will just give you few benefits of that, and we will just have to add that. Now, what we have to deduct out of that is whatever we have paid as employee, whatever we have paid for the benefits. Now, how come it is possible? When it is a benefit, it means benefit. Will I have to pay for that? Sometimes you have to. Say for example, you were going to buy a car and you liked a very expensive car, and then you thought it's too expensive, man, I can't buy it. Then your boss said, all right, okay, you did not tell your boss that you are going to buy a car. You were sitting in your office and your boss came to you, you are doing quite well, I'm thinking to gift you a car worth 15,000 pounds. Then you thought, all right, okay, the car which I saw earlier today, that was 25,000 pounds. So you spoke to your boss and said, all right boss, you are giving me 15,000 pounds worth of car anyway, so why don't you just buy me car of 25,000 pounds? I will give you 10,000 pounds out of my pocket, you can deduct it out of my salary. So sometimes you have to pay for your benefits as well, part of it. You do not have to pay all of it. So that's what it says, amount paid by employee for the benefits. So if you have paid anything towards the benefit, that will be deducted out of it. And there are some allowable deduction which we'll see later in this at end of the chapter. Now these are allowable deduction that will also be deducted. excuse me. Now it says bonus. The amount of bonus is taxed in the tax year in which the employee becomes entitled or paid for the bonus. So whenever you are paid, you will have to pay tax on that. You will be taxable in that specific tax year. Then there is a list of benefit, and it starts and it goes and goes. So first of all, it says vouchers. So all kinds of vouchers. If they are credit cards, credit vouchers, cash vouchers, credit tokens, and they will be taxable, provided to employees, are taxable on the cost to the employer. So whatever the cost of employer is, they will be taxable according to that, and it will be included in your benefits. So when they will be included in your benefits, they will be taxable. Then it says accommodation. Now one of the benefits is that employee gives you accommodation. Employee can give you accommodation, and as far as F6 taxation is concerned, we will divide the accommodation into three sorts of accommodation. The first accommodation is accommodation provided is job related accommodation. Let's say, for example, if your job is of a sort where you have to live at that business premises, then they will give you accommodation as well. Now if they give you accommodation where you are required to live, where your job requires you to live at that place, then it will be tax free. You don't have to pay tax, so it will be exempt. Accommodation where employees are required to live, that will be exempt. Now in the case 2, employee can give you accommodation and you are not required to live in that place, but that accommodation is £75,000 or less than that. Now the value of the accommodation is £70,000 or less than that. Now if the accommodation's value is £70,000 worth £75,000 or less than that, then what happens is that taxable amount will be higher of annual value and rent paid by the employer. So it will tell you in the question, it will also tell you the annual value, and it will also tell you the rent paid by the employer. Now annual value is sometimes known as rateable value as well. Now in the third case, if the value of the property is more than £75,000, then what we do is we'll have to take the cost of the accommodation. So it will be cost of the accommodation or the market value of the accommodation less £75,000. So cost of accommodation or market value of accommodation less £75,000 multiplied by official rate of interest. So in our case, which is F6, or if it would have been P6, official rate of interest is 3% in every case. So cost of accommodation less £75,000 into official rate of interest, but we will also have to add annual value into it. Alright, so annual value will also be added into it. So if your accommodation is more than £75,000, now then you will have to see that, then you will have to apply this formula. Then the next one is expenses connected with the living accommodation. So they will be taxable. All the amount paid by the employer will be taxable. So say for example, you live in accommodation where you are using air conditioning or heating, then these sorts of expenses will be taxable. Expenses reimbursed by employer when employee is away from home. Say for example, if you are away from home, you live in London and you are required to go to Manchester office, then £5 per day will be exempt. Now if you are required to live on the next page number 7, if you are required to live, if you are required to go overseas for business purposes, for your job purposes, then £10 per day will be exempt, and if exceeds, then whole amount is taxable. Scholarships to employee or family members of employee are taxable. Removal expenses up to £8,000 are exempt. Now removal expenses are the expenses, say for example, if you are required to move out of this house to buy a house which is near your accommodation, near your job, then these are expenses which are removal expenses or relocation expenses, and if they are £8,000, then they are exempt, and if they exceed than that, then only excess will be taxable. Say for example, they paid you £10,000, then £8,000 will be exempt, and £2,000 will be included in the benefits. Medical insurance premiums If employee is outside UK for the performance of duty, then exempt. If employee is in the UK for performance of duty, then the entire amount is taxable cost to the employer. On the next page, which is benefits of the car, now we will do a little example on that as well, but this formula is standard. You will have to memorize this formula. So we'll take the list price of the car. List price will be given to you in the question, and we will deduct the capital contribution, but the maximum capital contribution we can deduct is £5,000. Now what does the capital contribution mean? That, say for example, you want to buy a car, but you have contributed something towards the car, so that is the capital contribution. Means you have paid something to buy the car. The rest of the stuff was rest of the amount was paid by the employer. Multiplied by 16%. Now this 16% is a standard rate. Now if the car emits 95 grams per kilometer of the CO2 emissions, then it will be 16%. If it emits 50 grams per kilometer CO2 emissions or less than that, then it will be 7% instead of 16%. 11% if it is from 51 to 75 grams, and 15% from 76 to 94 grams. So this figure you will have to remember. You will have to memorize this. And if it is more than 95 grams per kilometer, then the standard rate, which is 16, will be added. Now this 16 is actually the percentage which we will apply to the whole figure. We will see in the next video how to apply this. And then we will add, after doing the addition, what we do is we'll take the actual CO2 emissions which will be given to us in the question. We'll take the actual CO2 emissions less 95 divided by 5, and we will have to add 3% as well if there is a diesel car, only for the diesel car. Now this percentage can go is to 37%, as it shows below that. This percentage can maximum go to 37%. And obviously if the car is provided for less than a year, then we will have to proportionate the years as well. Alright. Now it says other benefits associated with the car, which are insurance, repairs, maintenance, vehicles, all of them are exempt. License, etc. Then it says the fuel for the car. Now 22,200 multiplied by the percentage which we have seen earlier, which we have seen in the calculating the car benefit, that percentage will be applied here. 22,200 multiplied by that percentage. Now obviously if the car is provided for less than a year, then we will have to proportionate it. Now, this is the benefit for the fuel. It will be calculated as well. Now say for example, if the employee has provided something towards the fuel, that will not be considered. As it says in the note, contribution by employee of private usage for fuel is not deductible. Then it says use of other assets. Say for example, if any other asset is provided, then we'll have to take 20% of the market value when first provided. Now other assets means any other asset which was provided, that will be we will apply 20% on that. Now the benefit will be reduced by months over 12 if it was provided for less than a year. If you come to the next page, it says other assets provided for use is subsequently purchased by the employer. Now say for example, if any asset was provided, say for example a TV was provided to the employee, which we took as 20% of the benefit, 20% of the list price, market price of the television, but that was eventually purchased by the employee. What happens in that case? Now the benefit will be higher of, first case we'll take the market value of the asset when sold to employee. Now we'll take the market value when we are selling it to employee. We'll go to the market and see what the market price is, and what we have to deduct is what is paid by the employee himself. Now say for example, if we have given the if I will assume I'm employee, so if accountancy tube gives me this iPad, say for example, and it says that you can use it, now what I will have to do is, because this is other asset, I will take 20% of that, 20% market value of that. Alright, so that will be included in my benefits. Then if I want to buy this iPad from my accountancy too, then I will speak to my boss and I will say I want to buy this. Then they will, how to calculate the benefit. First way is that my boss will say, all right, take it to the market and check the market price. So we'll check the market price, and whatever I will pay, say for example the market price was £300, I paid £200, £100 will be benefit. But this is one way. The other way, the second option, is that we'll take the market value when first provided. Now when it was first provided to me, it was £500 worth of this iPad, and whatever amount I have paid, I will have to deduct that, and whatever amount is already been taxed, which is 20%, that will also be deducted. Right? The number 12 is approved mileage allowance. Now say for example, if you drive the car now up to a certain limit, the standard criteria is given by HMRC. Now what the standard criteria is, the approved mileage, the standard criteria is known as approved mileage allowance. For cars, for the first £10,000 it's different, and above 10,000, for the first 10,000 miles it is different than the second 10,000 or above 10,000 miles is different. Now say for example, if you have a car and you drove it for 10,000 miles, then up to 45 pence per mile is different. For first 10,000 miles it's 45 pence per mile, and if you drove for say for example 15,000 miles, then the excess 5,000 miles will be at the rate of 25 pence per mile. Alright, likewise for motorcycles it's 24 pence per mile for first 10,000 miles, and it's exactly the same for above that, and motorcycle is exactly the same for both cases as well. Right, now what happens is that up to the approved mileage allowance is exempt, and if it is paid in excess of that, that will be taxable. Note, if this employee receives less than approved mileage allowance, then it will be allowable, it will be allowed. So say for example, approved mileage allowance for the first 10,000 miles is 45 pence per mile, and you have been given 30 pence per mile, so the difference is allowable, and it can be treated as deduction. Right, so formula to use is that allowance paid by the employer. Now say for example, if employer pays you, I don't know, 40 pence per mile for for all the miles, and so we'll take whatever the miles are multiplied by the 40 pence per mile, so whatever the amount is less approved mileage allowance, so we'll have to deduct approved mileage allowance, which is 45 pence for first 10,000 miles, and above that 25 pence. Alright, so the net amount will be either the benefit or the allowable deduction. If employer pays you less than approved mileage allowance, it will be deduction. If employer pays you exactly or higher than, if it pays you higher than approved mileage allowance, then it will be benefit and it will be taxed. The next one, number 13, is beneficial loans. Now employer can give you some loan. Now if employee pays interest to the employee pays interest to the employer less than official rate, then it is calculated using either of the two methods. The first is average method, and average method means that we will take average, so we'll take the start and the end, we'll divide by 2, and that will be average. So what happens is that in average method we take the highest outstanding loan. So say for example, in the start will be the highest, obviously you took the loan of £10,000 from your employer, so from at the start it will be £10,000, then you will start paying £500 a month, then obviously it will gradually be decreasing, and we'll take the lowest as well, which will be at the end of the year hopefully. So at the start, highest outstanding loan plus lowest outstanding loan divided by 2, multiplied by months over 12, and divided by official rate, which is 3%, and what we have to deduct is whatever interest we have paid on that, whatever the employer has paid. The second method is the strict or accurate method. We'll take the balance of loan outstanding in the months. So for example, outstanding loan in first month, outstanding loan in the second month, likewise. So we'll take for every month, multiplied by months over 12. So if we'll have to see that how many months are they, and we'll have to multiply by official rate of interest, and whatever interest has been paid, we'll have to deduct that out of that total amount. All right. Now, say for example, if the question is silent, we'll have to take lower of these methods, because we want our benefit to be lower and we want to pay less tax. That's why we'll have to choose lower of these two. And obviously, if the loan is less than £10,000, then we do not have to take any benefit at all. So if the loan is £10,000 or less than that, that will be exempt loan. On page number 10, now the benefit number 14 starts. It says vans and heavier commercial vehicles. Now the annual charge is 3170 if the van is made available for private use for employees, and we'll have to divide by months over 12 if it is provided for less than 12 months. Fuel for van is 598, and again if it is less than 12 months, we'll have to multiply by months divided by 12. Mobile phone, first mobile phone is cost of up to one mobile phone is exempt, and the second and subsequent mobile phones are taxable at like other assets. So 20% multiplied by market value of the mobile phone when first provided, obviously multiplied by months over 12 if it is less than for 12 months. Then running costs and top-up vouchers are exactly in the same way like the phones. So for first phone it is free, it is tax free, and the subsequent phones, second and subsequent expenses, running cost will be taxable. Bicycles are exempt from tax. So if employer has given you any bicycle, it will not be included in the benefits. Now, sale of bicycles, say for example, if you want to buy the bicycle from your employer, then what will happen is it will ask you that just go into the market and check the market value, and we'll check the market value, and whatever we pay to our employer, it will be deducted out of the market value, and the net amount will be a benefit. All right. So market value of the bicycle when sold, less price paid by the employee. Entertainment expenses by third parties. Now, if any third party has provided any entertainment, that will be exempt. It does not say any employer. It's a third party, so that's why it is exempt. A non-cash award for long service given for a service of 20 years or more. Now, if you have worked for a company for more than 20 years, and it will give you some benefit, that will be exempt up to £50 multiplied by number of years. If it exceeds, then it will be taxable, and only in case of if you have worked for the company for 20 years or more, not for less years. All right. Then it says staff parties, cost per member per year is £450 or less than that, it is exempt. And sorry, not 450, it's 150. If it exceeds, then the whole amount will be taxable. The staff parties mean that when you are working in an environment for a company, then obviously there will be lots of colleagues there. Now up to £150 will be exempt. If employee gives you a party for £150, that will be exempt, and if it exceeds, then the whole amount is going to be taxable. So if your employer invites you for a party, you must have to ask him that how much you're giving us the treat for. If it says 160 quid, then please don't go, because you are going to be charged. Then it says staff suggestion schemes. So first £25 is exempt, excess is taxable. Staff suggestion schemes are the schemes whereby in a company, your company says that when you suggested a good idea, we'll give you £25. So when you give a suggestion, they will give you £25, or even if they pay you more than that, they can pay you, but first 25 will be exempt, excess is going to be taxable. Employee attending full-time course, if you're attending full-time course, £15,480 will be exempt, and if it exceeds, then whole amount is going to be taxable. Now from 25 to 31, these are all exempt. Even on the next page as well, cost of work buses and minibuses are exempt. Employer provided uniform, like accountancy to give me 5 sets of these suits, so these are going to be taxable because these are work related. Employer contributed for additional household cost by employee working partly or wholly at home, say for example if my boss gives me some homework to do for accountancy too, and if I contribute towards the expenses of electricity and heating, that is going to be exempt. Child care allowance, please mark it as important. This is very, very important. Now child care allowance is exempt depending on how much the salary is, right? So for basic rate taxpayer employees, up to £55 is exempt. 55 pounds means 55 pounds multiplied by number of weeks, so 55 pounds per week, and excess is taxable. Now while looking at the basic rate band, it says for basic rate band taxpayer. Now we'll have to see with the salary only, we'll not have to see with other things. So while checking that if the employee is a basic rate taxpayer only for this benefit purposes, we will have to check with the salary only. All right. Now if he is a basic rate taxpayer, his salary is in the basic rate band. If his salary is in the basic rate band, then up to 55 pounds per week is exempt. Excess is going to be taxable. And for a higher rate band, again, while checking the band of this person, if he is a higher rate taxpayer or not, we will have to see only with the salary. Please make sure you write it down. Only with the salary for child care allowance purposes. Please check it with the salary. So for higher rate taxpayer, if someone's salary is within the higher rate taxpayer, within the higher rate band, then up to 28 pounds is exempt. Excess is going to be taxable. And for additional rate taxpayer, again we will have to check it with the salary. Up to 25 pounds per week is exempt, and excess is going to be taxable. Right. Now benefit number 36, it says transport overnight cost where public transport is disrupted by industrial action, that will be exempt. £250 or less than that is exempt if the gift of goods from the third parties, not from the employer, but the gift from third parties. If it exceeds, then whole amount is going to be taxable. Then number 38 as well, eye care tests are also exempt. Travel benefits up to £50 is exempt. Now these are just insignificant small benefits which are non-cash, that will be exempt up to £50 per employee per year. Medical treatment up to £500 is exempt. If it exceeds, then whole amount is going to be taxable. And residual charge, please mark it important as well. Now for residual charge, so we have seen lots and lots of benefit, but we haven't covered each and every bit, have we? Now the things which we have not studied, the benefits which we have not seen anything about, then it will apply, this rule will apply, a residual charge. For the benefits for which no specific rule is available, this rule will apply. So the taxable amount of benefit is the cost to the employer. So whatever the cost of employer is, that will be included in this one. Alright, next one is the accrued income scheme. Now accrued income scheme is when it especially applies to the gilts, which are government securities, because they are exempt from, there is no tax in the capital gains tax. So what happens is that people sell the gilts just before the interest date. Say for example, if I buy a gilt and I keep it for some time, interest is paid 4 times a year, quarterly a year, then what happens is that after receiving one interest, then I keep it until the next interest date, right? So when the next interest date is approaching, just before the interest payment date, I am going to sell it. And when I am going to sell it, I will tell the buyer that because I am selling it to you, you are going to receive the interest next month. Now he will be happy, the buyer will be happy, and he will be willing to pay you some extra amount. Now when you pay it for the at the higher price, now you are selling it at the higher price because it is it is inclusive of interest income. All right. Now you are only selling it because of interest income, so you are selling it at the higher price. Now that higher price will be considered as your interest income instead of the selling price. All right. So that is the way, and that's how the accrued income scheme works. Now, accrued income scheme is a new syllabus area into F6 paper. Previously it was in the P6 exam, so we will have to read it carefully because it is a new area. Examiner may ask you some questions about that. Now, when the security is sold before the interest is paid, it will be called cum interest, and when it is sold after interest is paid, that will be X interest. All right, so cum interest is before interest is being paid, and X interest is after interest is being paid. And please make sure read the exam tip. Please consider savings income nil rate band while calculating the tax under accrued income scheme. All right, now say for example, I have given you the example that when I sell the gilt to a buyer just before the interest date, because I am selling it, I will not have any interest income, but the excess amount which I am selling, because I am selling it at the higher price because of the interest accrued, and that excess amount will be considered as my interest income. Then I will have to pay tax, I will have to consider the savings income nil rate band as well, because I will have interest income. All right, now on the next page, this is a list of allowable deduction which will also be deducted. Now remember, on the very first page of this chapter, I told you that how to calculate the benefit of employment income. We'll take the salary, then we add the bonus, then we add the benefit, then we deduct what we paid for the benefits, and then finally what we deduct is allowable deductions. Now these are the list of allowable deduction. Contribution to occupational pension scheme. Now we know what these are. Occupational pension schemes are when we say, for example, if my employer is accountancy tube, now they want me to, they are making the pension for me, so I pay something into the pension, but that pension will be managed by my employer. That is occupational pension scheme. We will read the pensions in more detail when we move to that chapter. But for now, occupational pension scheme, so if you pay something, that will be deductible. Now when it is deductible, when I say deductible, it means that it will reduce your salary and you will have to pay less tax. Now all of these benefits, if they are paid by the employer, they are exempt benefits. Right? Now if you pay subscription fee to ACCA or ICW, that will be exempt as well. A payment to charity made under payroll deduction scheme, that will be allowable deduction. Payment to liability incurred due to his employment, that is also allowable deduction. Payment of premiums for insurance to cover the liability to be incurred due to his employment, that is also deductible expense. Approved mileage allowance, which we have seen before, 45 pence for the first 10,000 miles thingy, that is also allowable deduction. Qualifying travel expenses. Now what are qualifying travel expenses? The travel expense for travel between home and normal workplace. Now say for example, if you go from your home to your office, to your normal office, now that is not deductible because it is normal commuting cost. You have to go to your office every day anyway. Travel expenses for travel between a normal place of work and temporarily place of work, that is deductible. So for example, if you go from your home to your office, your normal office, that is not deductible because it is normal commuting cost. If you go from office to temporary office, say for example, if you work in London and you go from one area to another area in London, that is temporary place of work, that is deductible. Now if you go from home to temporary place of work, that is deductible up to 24 months. Alright, now the diagram below that shows you that normal place of work, from normal place of work to home, from home to normal place of work, it is not deductible. It shows you in the X. And from normal place of work to temporary place of work, it is deductible. And from temporary place of work, from home to temporary place of work, only if it is less than 24 months. Right? Then it says the cost of business telephone calls on private telephone is deductible, but no part of line rent is deductible. All right? So line rent is not deductible, but the cost of private use, cost of business telephone calls on the private telephone is deductible. Appropriate portion of cost on heating, lighting, and council tax incurred by employee by working partly or wholly at home, like I told you that if I work at home and I use my electricity and heating and cooling for job purposes, that proportionate cost will be deductible. And in note it says that if above mentioned expenses are paid by the employer, then it will be exempt benefit for the employee. Alright, so that is end of our chapter, that is end of our employment income. We will see some question as well on employment income in the next video. I will show you some examples which are especially relevant for cars and accrued income scheme. Alright, so that's it for this video, and I will see you in the next video with a couple of examples. Thank you and goodbye.